Bank of America and Citigroup are questioning the Fed's stress test results, as we mentioned. The two major lenders say their own income projections differ from the Fed's, and they are asking for clarity on those discrepancies. They are also raising their dividends in the meantime. Joining us right now is Ken Leon, who is CFRA Director of Equity Research. And Ken, this is just kind of a weird situation. It's odd to see banks disagree with the Fed, especially in Bank of America's case, where they say, no, we would have lost more money than the Fed thought.
Well, it's great to be here. So there's 23 banks, and they all got approvals in the case of dividend increases on the surface level. But you're right, Becky, since 2012, this was quirky because not only that, of this probably difference of opinion, but Bank of America last week, you're waiting to see if they're going to raise the dividend, and they put a PowerPoint presentation on the mechanics of what they submitted. In the weeds of what this is all about is a debate on what's called other comprehensive income. It's a kind of a throwaway category if you can't get it into the operating income statement. We're going to hear more about this from Bank of America on July 18th. Again, Citi also had some issues, but we've never seen this before, and they felt it was important as it affects some of the other ratios that they have to abide by with the Fed.
I guess the more important point being here that the banks all went ahead and raised their dividends, including Bank of America last night. You like Bank of America stock. It has it had a rough year, but you've got a buy rating on it. Why is that?
You know, we wish there was positive news. I think this stock has underperformed the market, plus large banks. It's, down 13%. Banks have bounced back and they're down like 2%. And really, Bank of America's sentiment turned to negative, which we thought was an opportunity when the unrealized losses was the largest in the industry back in March, about $108 billion. But they got $2 trillion of deposits, diversified. And, so we think there was a penalty for Bank of America for that issue. Along comes the stress test, and we would have liked to have seen just a clean press release like everyone else, and we didn't see that for Bank of America. But then again, as an analyst, when you look at the operating performance of Q1 or even for Q2, we see them year over year having much higher revenue and earnings. Bank of America is executing, so this is not a problem child or a turnaround story in the large banks.
Okay. What do you feel about the other banks? What do you think about Citigroup?
Citigroup is still a longer-term turnaround. We have a whole rating on Citigroup. We think it's very event-driven to the selling of consumer bank assets outside of the U.S. There was disappointment with the largest one in Mexico, where they have to go the IPO route. So we do have a hold on Citigroup. Where we're optimistic is possibly the second quarter will be the trough of the investment banking cycle. So names like Morgan Stanley and Goldman Sachs, which have lagged, we think have upside opportunity later this year into 2024, which is why we have strong buys on Goldman Sachs and Morgan Stanley, which were down significantly in March when we upgraded those stocks.
Are those your favorite stocks at this point? Those three?
They are, just because I think there's a higher delta coming from the investment banking area, where they're ranked number 1 or 2.